Now, the self-managed super fund is nothing but a normal trust which is registered with ATO, and ATO gives similar concessions or the same concessions as are available to the big superannuation funds, and that is taxed at 15% and totally tax-free when you retire, provided you comply with all the rules and use that self-managed super fund only for the sole purpose of providing for your retirement benefits. So it comes with a compliance. Now, I'm often asked that which one is better. Now, it is not a question of which one is better, it is that which one fits your strategy best. Now, if you put your funds in an industry super or a retail super, then obviously somebody else is working hard to deliver you a return. If you do that in a self-managed super fund, you will have to work hard to deliver yourself the returns. So the first question you have to ask yourself is, do you have the skills or the aptitude and the time to be able to do it from there? A lot of time the people use it for investment in properties, because the only thing that is difference between the industry funds or the retail funds and a self-managed super fund is that in a self-managed super funds you can buy property. You can buy property, you can buy collectibles, you can buy gold, a lot of those type of things, sort of a passive investments you can buy and do it through a self-managed super fund. But running a self-managed super fund costs. So in retail funds or industry funds, also you pay the fees, even though you don't see it, but you pay the fees. And you will also pay the fees in self-managed super funds. So from an economic or a financial point of view, the first question to ask yourself is, what is the sweet spot in which the self-managed super fund is going to be cost effective for you, other things being equal. And usually the ATO would also recommend that you need to have about $250,000 in a self-managed super fund, because you will be paying for the cost of the audit, cost of the tax return, there will be other advice and all that involved. So unless you have less than $250,000 in a self-managed super fund, it usually is not advisable to have a self-managed super fund. But it is a great tool if you have some money, and if you want to invest in property, if you want to invest in commercial property, or if you are a doctor and you want to invest in a commercial property, that is a surgery, which you will tenant yourself. So it's a great vehicle. And it's also a great vehicle to transit a lot of your investments into tax-free structures, like self-managed super funds. So there is no right or wrong answer, but you need to go through a proper advice to decide whether the self-managed super fund is for you. I have seen a lot of people who have invested money into self-managed super fund, but only $80,000. I have seen people negatively geared properties in self-managed super funds. Total waste. Total waste. They are better off parking their funds in industry funds or retail funds and getting some returns. So, in summary, this is where we are onto self-managed super funds. Any questions?
Can a family have one as a self-managed super fund, or is that individual only?
No, family can have. You can have up to 6 members, and so it is a great tool for family. Husband and wife, and even children, the family can combine all their funds, and if you can have about $250,000, I mean, that makes sense. But you got to have an investment strategy, and you are responsible for managing your own retirement. You are not outsourced to the big retail funds and their investment managers.
If you don't mind, I just want to say something on those questions. If the members or the trustees of that self-managed super funds are individuals, there has to be 2 at least.
Okay.
Yeah, 2 to 6. If you have a corporate superannuation trustee, a company, that's obviously the only member, because a corporate cannot die. Yeah? So that's actually one of the things with self-managed super funds that we've seen a lot was husband and wife sets up a super, husband passes away, only one member. You have to wind up the self-managed super fund or appoint another member to the fund. Sorry, Mike.
Any other question? Yeah, and if there are, you had some questions about SMSF?
Nitin, I had a question about, when you say $250,000, what is the, like, an estimated annual fees or cost structure for an SMSF?
You need to budget something at least about $2,500, at least. Because a decent auditor will not, and depends on how many funds are there, but an audit will cost you about $650. At least $1,500-$1,600 would be the financial and tax returns and all that, and there could be other costs in there. I mean, a lot of time I've seen people who do it for less than $250,000 because they have enough money in there, they want to invest in property, so it's not a hard and fast rule, it's a guide.
Right.
Yeah.
Just wondering, can the money still be borrowed to invest into the property through the super fund?
It can still be borrowed, but I think Liz would know more about that, but from my understanding is very few banks are lending in self-managed super funds, and they want a much higher LVR.
Not necessarily.
Not necessarily, so Liz probably has some more things there, you can talk to her. And if you want to borrow in self-managed super fund, then there is an additional cost of creating LVRA and pay a trust entity. All right, if there is no other question, Corner, I'll hand over to you with the share investments and other things.